experience maybe at Wallstreet Winning with in the industry, in the stock market with options, that it's usually kind of understood that 70% of the time your option expires worthless. So that means if you are buying options, you're losing 70% of the time. Okay, if you're selling options, you're winning 70% of the time. And you may have heard of results that we're getting at Wallstreet Winning where we're at 95 or better, 96% success rate. How can you achieve that if the kind of the industry average is only 70%? Well, the key to that is, I'll call it the underlying algorithms and data processing that we do on all the stocks every night. We spend a lot of time looking at the fundamentals of companies and looking at how those stocks trade. So first of all, we want to make sure we understand what we're investing in. We want to find good companies that have the good fundamentals. That's part of the answer. And the other answer is the when. When is the right time to get into a company, which is key, driving a big part of success. For example, you wouldn't buy a stock at its 52-week high because to be successful, it has to stay at that level or go up and not drop significantly to be successful. So that right away gives you an indication of, whoa, okay, a little hint there. Ron doesn't invest in the IBD 50, which are high momentum, high trading stocks that are trading at their 52-week high. The reason is because tomorrow they all can go down if the market goes down. You have no cushion at all. And when you buy stocks at their 52-week high, to be successful, they kind of have to keep going up. And that's very difficult to find those stocks that keep going up. There are those new stocks, new companies. If you got in Apple at the right time, for example, when they came out with the iPhone, it went up. But what's Apple doing today? It is very mature in the phone market. It's mature in the iPad market. It is not doubling its stock price, every 6 months. That's not happening. It is in fact experiencing just the opposite. It is trading like a normal successful company. It goes up and down. So when would be the right time to get into Apple? Well, that's where we've come up with the algorithms to look at how Apple has traded over the last year and have it tell us when is the right time. So that if we buy Apple, we're not going to buy it at a 52-week high. We're going to buy it at a point in time where it has maybe gone through a previous downturn, stock price has gone down, and now we're going to enter it at the right time as it starts to recover and move up. We're going to buy Apple and we're going to sell some call options on it so that we can basically get two things: get the premium on the call and maybe even some little appreciation. The key is we don't need to go for 10 and 20% return overnight. We want to go for 1 and 2% return a week. If we can repeat that 50 times a year, just think about it. 2% is 100% a year. That's where the opportunity, that's where we're getting the win rate. We are finding those companies that are trading at the right price level based on their history, and they have good fundamentals. So we know that that company is going to be around, it's stable in the marketplace, and therefore that will maintain its stock price. That's what gives us the advantage. It would give you the advantage of not only a win rate of 70%, but 90, 95% because of the information that we are publishing on all the companies and all the stocks, in the stock market. And there are lots of stocks. It's not that you don't have enough opportunities. It's which one. Which one do you use? Which opportunity and what are they? And that's where the Wallstreet Winning system, with all of the mathematics and algorithms that I've come up with, presents that to you on a daily basis. You get to make decisions, on a set of companies, and you get to decide which ones you really like. Is it Nike or Under Armour? Two competitors sometimes might be in the right point in the marketplace to buy into. Well, you decide which one you like better, Nike or Under Armour. They're both good companies. You may favor one over the other. You can look at the data and you can make that decision. But the key is the system will present the information for you. directly. So you spend your time deciding which is the better opportunity for you, and that will indicate or provide for significant advantage so you can get that 95% win rate, make you very successful.